amazed as you discover decentralized finance, DeFi for short, and how this new technology is going to do to financial institutions what Uber did to taxi companies. Many consider this to be the most exciting sector of all in crypto. And after the experts in this next segment explain the opportunity, you'll understand why. But beyond the yields and the capital gains, this sector has the potential to unlock trillions in trapped value and to raise billions of people out of poverty across the globe. So put a pillow under your jaw so it doesn't hit the floor as you witness firsthand the future world of finance.
There's a proverb that says money solves all things, and the real translation of it says money solves almost all things. It doesn't solve all things, but it solves almost all things. And I can tell you it's a lot easier with money than it is without money, and so people should be looking at these types of vehicles to obviously expand their net worth and increase their wealth. And I think if you're not, it's only either because you're just too lazy to do it, or you bought into the narrative that again it's a scam, or it's for money laundering or things like that. And so I think we've seen Bitcoin go up to $63,000. We've seen a lot of these other cryptocurrencies explode over the years. And people might say, well, is all the opportunity gone? Absolutely not. The opportunity is actually just getting started. Because as kind of these things that we're talking about from this macro perspective start to unfold, I think that's where you're going to really see these types of assets and these types of technologies really shine.
How does a Main Street investor participate in that? How do they accelerate that?
Sure. Yeah, I think there's three ways you can really invest in cryptocurrencies. I mean, you have the first way, which is, you look at buying and holding kind of like the blue chip cryptocurrencies, right? So Bitcoin, Ethereum, Stellar Lumens, and others, Ripple, and so on and so forth. All of these others that most people probably already know about, right? So you can buy and hold. You can use a dollar cost averaging system, right? And put money into Bitcoin. I always tell people, look, I mean, you should just own some Bitcoin, and you should just hold on to it. Hold on to it forever, really, because, people thought I was crazy when I said Bitcoin would go to 20,000 and when it would go to 30,000 and 40,000. And I know there's some astronomical claims out there about Bitcoin going to 500,000 or $1 million per coin, per token. That's very feasible because once you understand the limited supply, you understand demand and supply, it's feasible that it could go to those levels. And so even if somebody owned a Satoshi at $1 million, which is a Satoshi is the smallest increment in a Bitcoin, it's 9 decimal places. And this is the difference between crypto, and I'm going to keep going on the investment part, but this is the difference between crypto and fiat. You can break down $1 into 100 pennies. You can break down 1 Bitcoin into 9 decimal places. So people always say, well, Bitcoin is $42,000 now, or when it was $63,000, they were like, well, who could own a Bitcoin? Or you can own a piece of a Bitcoin. Right. You don't have to own the whole thing at once, And so even if you think I missed it, I didn't buy it at $10 like Cecil did, or I didn't buy it at $1,000 like he told people to do back in 2016 and 2017, there's still opportunity because this market is going to keep going up, and it's here to stay. It's not going anywhere. It's embedded in society now, and it's getting more and more traction. It's becoming more and more mainstream. The regulators can't really do much about it at this point. They can try to curb it, but at the end of the day, I really do believe it's going to continue to grow. So that's one way that people can invest, and you can do that by opening up an exchange account, regulated if you're in the U.S. If you're outside of the U.S., there's plenty of other regulated options, or you can do it through a decentralized exchange. There's a number of ways you can actually buy it. For people that don't have access to that, they can still buy it through a peer-to-peer network. So they can go on to a peer-to-peer network, and maybe they have money in a PayPal account or something like that. They can buy it that way. So there's a lot of different ways that people can actually get involved and buy it now. It's become a lot easier than it was back in 2011 when I bought my first Bitcoin. And then the second way I would say is, if somebody who has a lot of wealth, they could follow some venture capitalist who's made couple 1,000% returns, and this is what they do all day, every day, and put their money with that venture capitalist or that fund. That's obviously a way to do that, and a number of family offices are doing that still today. Large institutional investors are doing that, and so there is a lot of money still flowing into cryptocurrencies, actually more than ever before. And so that's a second way you can do it. You could also, if you wanted to become more active, you could become a more short to medium term trader / investor in a number of different cryptocurrencies. They move often. One thing that I always tell people is, if you want to make money in any market, I don't care if it's a stock market or if it's commodities or cryptocurrencies, you have to be in something that has volatility, that's moving, that actually moves. The price of the price of it moves. Well, in the case of cryptocurrencies, they can be very volatile. They can move up or down tremendously in a very short period of time. So you do have to be cautious there. You never want to invest with money you can't afford to lose. But those are really kind of like the core opportunities. And then, of course, you can invest in blockchain type companies that are building technology that have the potential to change whole industries, or in some cases to even change the way that our entire world system operates. And so especially when it comes to decentralized finance applications and things like that, that are really changing the way we look at monetary policy and things that go on even a government level. So there's opportunities there. There's obviously things now like NFTs, so you can invest in JPEGs, right, in digital art. Right. And we've had this big explosion over the summertime of NFTs, and a little bit more complex and complicated to navigate and to get into, but there are definitely ways to do it. And so at just the core level, I would just say, look, buy some Bitcoin, buy some Ethereum, and be a buy and holder of some top coins. Put $1,000 into each, and just sit on it. I remember when the market crashed at the end of 2017, the crypto market went from 20,000, and then it just started its dive all the way down to 3,700. At the time, it was like everybody was like, oh, crypto's going away. Well, we've seen cryptocurrency rebound over and over and over again. So you're going to have ups, you're going to have downs, but if people will just start putting a little bit of money into it, as an alternative investment, I would say, I think you're not going to be disappointed in 5 or 10 years.
I first really started to dive into crypto and blockchain. I remember it was like the summer of 2016. And when my boss was asking me about, how does this stuff work? And I think it's going to affect the media industry in some way. And so I started to do my initial research then, and bought my first crypto and just started to trade and just fell in love with it.
DeFi. Can you just give a broad overview of what that is for our audience?
Absolutely. Yeah, DeFi is an entire movement within the broader realm of cryptocurrency that's trying to disintermediate banks specifically. So right now, kind of the core primitives, the financial primitives that DeFi is trying to replicate are borrow and lend, right? So there's smart contracts out there like Aave, for instance, which, again, full disclosure, we're long Aave. We love that project. And what they're trying to do is match borrowers and lenders just through decentralized software, right? And so the job of a bank is to take your debits, right? Or your, the money that you put in there, your savings, they give you a 0.01% rate of return or 0.02% interest on those savings. And then they'll go out and they'll take your money. And guess what? They're going to lend it to Joe across the street who wants to, get a mortgage, right, at 3%. And so you're like, whoa, there's a 3% mortgage, and then there's a 0.01% savings. So where's the disconnect? Well, banks, and even with credit cards, some of those things have like 25% APRs, right? And so you're like, well, why is the lender, right, me as a depositor at a bank, why am I not seeing any return on my money, right? Well, banks have massive overhead costs, right? They have 100,000 people operations. They got salaries to cover. They got office space. Let alone they have a mandate, a fiduciary responsibility to their shareholders to make them money. So when all this kind of comes down to brass tacks, you're like, well, the customer is the product, right? Just like how we are with Facebook. And people are realizing that, as everybody starts to revolt against Facebook because they use your data in different ways. And, I don't necessarily have a strong opinion on that right now. But with banks, I'm like, I think that at the end of the day, the lender should absolutely see a higher rate of interest, and the borrower should also see low rates of interest as well, right, based on supply and demand. And so what we're seeing is kind of this explosion of peer-to-peer borrow lend. It's fascinating. It's really fascinating to see. It's like almost like, peer-to-peer music sharing, file sharing way back in the day, right? Like obviously we're using money here, but you're disintermediating, the record companies in the same way. So that's one primitive of DeFi. And it's the other one is basically, exchanges, right? And so being able to not just borrow and lend, but exchange asset for asset without another intermediary, right? And so all these kind of, these ideas comprise this overarching theme called decentralized finance. That's what DeFi stands for, decentralized finance. And it's unstoppable because the code isn't hosted on one company's server, right? It's not like Aave is a company. Aave is computer programs that are spread out on anybody who's running, an Ethereum node all around the world. Right. And so it's truly unstoppable. And if for instance, like if China bans DeFi, right, or they pretty much effectively have banned all crypto transactions. DeFi is like a hydra, right? You cut off one head, you're going to have 7 heads grow in its place. And a lot of people think, is the U.S. going to come crack down on DeFi? And there absolutely will be, periods and different actions and stuff that they take against dinos, is what they're calling them. Dino means decentralized in name only. And so, they are going to absolutely be going after some people. But again, I think that this entire movement of DeFi is really just beginning, right? I just checked this morning, total value locked in DeFi projects across Ethereum, Solana, Binance Smart Chain, Phantom, a lot of these layer 1 protocols, $200 billion in total value locked. So that's like, again, peanuts compared to, JP Morgan, for instance, which has a market cap of something like $400 billion. And it's like, so when you kind of take the total addressable market and you extrapolate it out, if you're at, $200 billion of collateral in, this will be like trillions and trillions of dollars, right? The banking industry is $34 trillion. And so I think we've got a long way to go. I get really hyped up about DeFi, just because, I think that's where most of the upside is going to be in the market. But at the end of the day, this, DeFi is absolutely unstoppable, and it's going to happen in one form or another, and it will take some market share from banks. It will take, Western Union, God bless them, that's got to be a sinking ship, because, they charge 20% on remittances, and now you could do it for free with Bitcoin and Lightning Network through Jack Mallers' Strike company, right? Or you could just send tokens across to your buddy's Ethereum wallet, and that's it. So I think that the remittance game is pretty much dead in the water.
Yeah, and it's a perfect example of how it brings benefits to the users of the system.
Right.
Whereas banks are the largest beneficiaries of banking. Mm-hmm. They provide us services as well. There's an exchange of value, but whenever you take the middleman out, it gives margin back to both ends of the value chain.
Absolutely.